Welcome to Trading 101, the ultimate financial guide for complete beginners. If you are watching this video, it means you want to escape the 9-to-5 grind, build a secondary source of income, or become a full-time professional trader. But when you look online, you see a massive wave of confusing terms like stocks, crypto, options, leverage, forex, and futures. It is completely normal to feel overwhelmed. Today, we are going to fix that. In this comprehensive 18 to 20-minute masterclass, we will break down the three largest financial markets in the world: the stock market, the foreign exchange market, and the cryptocurrency market. We will cover exactly how they operate, the real capital required to start, the structural hidden risks, and finally, how to choose the perfect market tailored to your personality and pocket. Watch every single second carefully, because a wrong choice in the beginning can wipe out your hard-earned savings, but the right path can compound your wealth forever. Let us begin Part 1, the traditional giant, the stock market. When people think of trading, the stock market is usually the first thing that comes to mind. It is the absolute backbone of global finance. When you trade stocks, you are buying and selling fractional ownership shares of publicly listed companies. Think of names like Apple, Tesla, Nvidia, Microsoft, or Amazon. If a company invents a groundbreaking product or increases its quarterly revenue, the institutional demand for its stock rises, driving the price upward, which results in your profit. The stock market is highly centralized and heavily regulated by major government bodies, such as the SEC in the United States. This heavy regulation gives traders a massive layer of safety, because corporate manipulation is strictly penalized. However, this stability comes with strict limitations. The stock market is not open 24/7. It strictly operates during official corporate business hours from Monday to Friday, typically from 9:30 a.m. to 4 p.m. Eastern Time. This means if you have a tight day job, trading live stocks can be incredibly difficult. In terms of capital, if you want to trade premium global stocks and handle market fluctuations, you generally need a starting capital of at least $500 to $1,000 to see any meaningful financial returns. Price movements here are relatively steady and predictable, driven by corporate earnings reports, economic data, and real-world supply and demand. Part 2, the trillion-dollar ocean, the forex market. Forex stands for foreign exchange, and it is legally and structurally the largest financial market on planet Earth. To put it into perspective, while the stock market trades billions of dollars a day, the forex market processes over $7 trillion every single day. In this market, you are not buying companies. You are trading national currencies against each other in pairs. The most popular pairs are the US dollar against the euro, the British pound against the Japanese yen, and the Australian dollar against the Canadian dollar. The fundamental logic is simple. If you analyze global economics and believe the European economy will outperform the United States, you buy the euro-US dollar pair. If your analysis is correct and the euro strengthens, you make money. The greatest benefit of the forex market is its incredible liquidity and accessibility. It operates 24 hours a day, 5 days a week, moving continuously through major global financial sessions: the Sydney session, the Tokyo session, the London session, and the New York session. This non-stop cycle allows you to trade late at night or early in the morning based on your own schedule. Furthermore, forex is famous for providing massive leverage. Leverage allows you to control a large $1,000 position with a tiny security deposit of just $10 or $20. Because of this high leverage, you can open a live forex trading account with as little as $50. This makes it highly attractive for beginners with low capital. However, beware. While leverage multiplies your potential profits, it multiplies your losses exactly the same way. If you do not use a strict risk management strategy, a micro-movement can instantly blow your entire account. Part 3, the Wild West of finance, the cryptocurrency market. Now, let us pivot to the newest, fastest, and most volatile market in human history, the cryptocurrency market. This market is driven entirely by blockchain technology and digital assets like Bitcoin, Ethereum, Solana, and thousands of alternative coins. Unlike traditional stocks or regional forex, the cryptocurrency market literally never sleeps. It is completely decentralized and operates 24 hours a day, 7 days a week, 365 days a year, including holidays. Crypto is world famous for its mind-boggling price volatility. In the stock market, a 5% move in a day is considered massive. In the crypto market, it is completely normal for an asset to shoot up by 50% or crash by 80% within a few hours. This hypervolatility is a double-edged sword. It creates an environment where a disciplined trader can turn a tiny $100 account into thousands of dollars very quickly. But conversely, without structural discipline and a hard stop-loss, it can wipe out your entire capital in the blink of an eye. Another huge advantage for beginners is that there is virtually no barrier to entry. You can download a global exchange app and start trading crypto with as little as $10. The market is heavily driven by social media hype, technological advancements, global liquidity cycles, and retail market sentiment rather than traditional balance sheets. Part 4. Structural differences and hidden fees. To truly survive as a professional trader, you must understand the operational mechanics and costs of each market. In the stock market, you encounter trading commissions, platform maintenance fees, and overnight swap fees if you hold trades long-term. In the forex market, traditional commissions are rare, but brokers make their money through something called the spread, which is the micro difference between the buying price and the selling price. High volatility can widen the spread, instantly cutting into your profits. In the crypto market, you deal with maker and taker fees, along with substantial funding rates if you trade perpetual futures contracts. Understanding these micro fees is vital because if you are a day trader executing 10 trades a day, hidden fees can eat up 30% of your monthly profits without you even realizing it. Part 5. The ultimate beginner verdict. So, after analyzing all three giants, which market is the absolute best for you to start today? The honest answer depends entirely on two things: your starting capital and your emotional risk tolerance. If you have less than $100 in your bank account but you possess high screen time and want fast-paced global action, Forex trading is your best entry point, due to its structured sessions and high liquidity. If you love technology, can emotionally handle massive price swings without panicking, and want a market that you can trade on weekends, then cryptocurrency is your perfect playground. However, if you already have a decent capital of over $1,000, prefer stable long-term wealth compounding, and want a heavily regulated safe zone where you can sleep peacefully at night, the traditional stock market remains the absolute gold standard of trading. No matter which path you select, always remember this golden rule: the market does not care about your feelings. Without a defined trading plan, strict emotional discipline, and a protective stop-loss on every single order, you are simply gambling. Treat trading like a professional business. Protect your capital at all costs, and the market will reward you beyond your imagination. Thank you for watching this ultimate masterclass. If you found real value in this deeply detailed breakdown, make sure to smash the like button, leave a comment about which market you are choosing, and subscribe to Disciplined Trader for more high-level institutional strategies. Stay disciplined, protect your risk, and we will see you in the next comprehensive tutorial. Now that you understand the fundamental differences between stocks, Forex, and crypto, you might be asking yourself, what is the exact next step? How do I actually start reading these markets to make a consistent profit? Here is a crucial warning for every beginner. Do not make the mistake of jumping into live trading immediately. Many beginners rush in, mix up all the concepts, and end up losing their entire capital. We want to avoid that confusion entirely. Trading is not about guessing. It is a highly structured skill. To become a successful trader, you must learn how to read the language of the market. And the language of the market is written in two major forms: candlestick patterns and chart patterns. Think of candlestick patterns as individual words. They tell you what is happening in the market second by second, showing you the immediate battle between buyers and sellers. Chart patterns, on the other hand, are like full sentences. They show you the bigger picture, the historical repetitions, and where the major institutional money is moving. If you try to learn everything at once, you will get overwhelmed and your brain will shut down. That is why on this channel, we believe in organized, step-by-step learning. We are going to break down every single concept separately in our upcoming masterclasses, so you never get confused. If you are truly serious about mastering this skill and changing your financial future, take action right now. Smash that like button to show your support, and hit the subscribe button with notifications turned on. By subscribing to Disciplined Trader, you are joining a community of serious individuals who value risk management over greed. Get ready, because in our very next video, we are diving deep into the world of candlestick patterns. We will look at powerful tools like the hammer, the inverted hammer, and how to identify trend reversals before they even happen. After that, we will launch a dedicated series on chart patterns, including head and shoulders, double bottoms, and institutional breakout strategies. This channel is going to be your complete, free trading academy. Stay focused, do not rush the process. Keep your emotions in check, and let us build your trading discipline together. Thank you for staying until the very end of this foundation guide. Keep practicing, protect your capital, and I will see you in the next comprehensive candlestick masterclass.